Hi students, 12th Standard Accountancy, Chapter 5, Admission of a Partner, Illustration Sum number 25. The balance sheet of Rekha and Mary on 31st March 2018 is as follows. Liability side items are capital account, general reserve, workman compensation fund, sundry creditors. And asset items are buildings, stock, sundry debtors, cash at bank. They share the profit and losses in the ratio of 3:1. They agreed to admit Kavita into the partnership firm for 1/4 share of profit which she gets entirely from Rekha. The following are the conditions. Kavita has to bring 20,000 rupees cash as a capital. Her share of goodwill is valued at 4,000 rupees. She could not bring cash towards goodwill. Depreciate building by 10%, stock to be revaluated at 6,000 rupees, create provision for doubtful debts at 5% on debtors. Prepare necessary ledger account and balance sheet after admission. Listen here, from the given information we are going to prepare ledger account and balance sheet. Ledger account means what? Revaluation account and balance sheet. Okay, listen here, first we are going to identify the given items in the box from the question. Okay, so capital account goes to capital account and general reserve goes to capital account. Workman's compensation fund goes to capital account, because general reserve and workman compensation fund will be distributed to the old partners capital account with their old profit sharing ratio. Okay, sundry creditors goes to balance sheet, liability side of the balance sheet, and buildings on asset side items will all goes to with adjustment on the balance asset side of the balance sheet. Listen here carefully. From the question within the box they have given general reserve and workman compensation fund, right? So and also we are going to prepare the ledger account, which means we are going to prepare the revaluation account. Okay, from the revaluation account, if you get the profit or loss, it will be distributed to the old partners with their old profit sharing ratio, right? So it will be goes to old partners capital account. If we get profit or loss from the revaluation account, which means a ledger, that loss or profit is to be immediately transferred to the old partners with their old profit sharing ratio. Old partners capital account. Okay, underline capital account. So listen here carefully. If they didn't ask to prepare the capital account, we need to prepare the capital account. Why? Because there are lots of adjustment here. Say for example, one general reserve will be calculated to the capital account and workman compensation account will be calculated with the capital account. Okay, and we are going to prepare the ledger account. From that ledger account we will get profit or loss. It will be immediately distributed to the old partners capital account, so it will be also included to the capital account. So we need to prepare the capital account only. We will get the conclusion balancing figure of after all the adjustment we are going to do with the capital account only, we get the final capital value. With that final capital amount only we are going to prepare the balance sheet liability side of the capital account. We are going to give that respective capital value to the respective partners account in the balance sheet. Okay, we can't enter in the liability side of the balance sheet on capital account from the given capital value on in the question in the liability side of the capital account. We didn't take this old capital value. After adjusted all the related capital account, finally we get the original capital value. From this capital account only we are going to enter into the give it to the old respective partners account. Okay, so if they didn't ask the capital account also, we need to prepare the capital account. Okay, so listen carefully. So we need to prepare the capital account. After only we are going to prepare the balance sheet. Okay, so first of all we are going to prepare the proper necessary ledger account. Here also I want to give one information. Whenever I am going to take the classes, accountancy classes in my students, they ask prepare the ledger account directly, even though I am going to advise my student to pass the journal entry from the question. It will be easy for them to prepare the ledger account without any mistake. Okay, so whenever you prepare the ledger account, please I ask you to advise you to pass the journal entry from the given information. Without any mistake, finally you will get the clear and correct answer, the balance sheet. If you make any mistake in the ledger account, it will be consequently continuously you are making mistake in capital account and balance sheet also. So entire sum will be mistakes. So to avoid that mistake, you are going to pass the journal entry from the given adjustment before prepare the ledger account. Okay, so in this way I am going to prepare the ledger account. Okay, to pass the journal entry, simultaneously I prepare the ledger account. Okay, so listen, the first question is Kavita has to bring 20,000 rupees as a capital. Listen, they share the profit and losses in the ratio of 3:1, which means the old partners Rekha and Mary share their profit and losses 3:1. They agreed to admit Kavita into the partnership firm for 1/4 share of profit. So Kavita is a new partner whose share of profit is 1/4. Okay, which she gets entirely from Rekha. Okay, so Kavita is a new partner. She has the 1/4 share of profit. That 1/4 share of profit, the old partner Kavita's sacrifices is the share of profit and in favor of Kavita. Okay, how can Kavita, the new partner, get share of profit 1/4? From old partner Rekha. There are two old partners. Who are they? Rekha and Mary. Mary didn't sacrifices any share of her profit. So Kavita only sacrifices 1/4 share of her profit in favor of new partner Kavita. Okay. So are you clear? Then come to the adjustment. Kavita has to bring 20,000 rupees capital. So cash comes into the business. What is the journal entry? Cash or bank account debtor to Kavita's capital account 20,000 rupees. Right? Then her share of goodwill is valued at 4,000 rupees. She could not bring cash towards goodwill. Listen, Kavita is a new partner. She contributed 20,000 rupees capital at the time of admission. But she didn't contribute her share of goodwill 4,000 rupees towards goodwill. She could not contribute 4,000 rupees towards goodwill. So how can it will be compensated? That 4,000 rupees new partner's share will be taken from her capital. Okay, what is the format? If the new partner didn't contribute goodwill, it will be taken from the new partner's capital amount. Okay, so in this way, Kavita's capital amount is 20,000 rupees. The new partner's Kavita's share of goodwill value is 4,000 rupees. Kavita contribute 20,000 rupees, but Kavita didn't contribute 4,000 rupees for goodwill. So that goodwill value 4,000 rupees is taken from Kavita's capital account. Okay, so what is the journal entry? Goodwill account debtor to Kavita's capital account. Okay, then that 4,000 rupees goodwill immediately transferred to the old partner Rekha's capital account. Why? Because Rekha, the old partner Rekha only sacrifices her 1/4 share of profit, her share of profit in favor of new partner Kavita. Right? So that 4,000 rupees goodwill taken from new partner Kavita's capital account immediately transferred to the old partner's Rekha's capital account. So what is the journal entry? Kavita's capital account 4,000 rupees to Rekha's capital account 4,000. Why we didn't write goodwill account debtor to Rekha's capital account? Why? Because the new partner Kavita didn't contribute her share of goodwill 4,000 rupees. We only taken that 4,000 rupees from Kavita's good capital account. So for that only you are going to write Kavita's capital account debt of 4,000 rupees. Immediately transfer to the old partner's Rekha's capital, that 4,000 rupees. So for that we are going to write to Rekha's capital account 4,000 rupees. Why? Because what is the reason? The old partner Rekha only sacrifices 1/4 share of her profit in favor of the new partner Kavita. So for that goodwill 4,000 rupees goes to Rekha's capital account. Are you clear? Okay. Next, depreciate building 10%. Okay. We are also have the building value 50,000 rupees in the costing on asset side of the balance sheet. So here the adjustment they have given depreciation building 10%. Okay. So depreciation 10% means 50,000 into 10%, 10 by 100, you will get 5,000 rupees depreciation. Building is an asset account. So asset account 5,000 rupees decreases. 10% means 50,000 into 10% means 5,000 rupees. So depreciation value 5,000 rupees decreases. Asset value also decreases. If the asset value decreases, what is the journal entry? Revaluation account is to be debited. Building account is to be credited. So you go to where is the revaluation account? Revaluation account is on debtor side. So you go to debtor side of the revaluation account. You are going to write to building 5,000 rupees. Are you clear? Then stock to be revaluated 6,000 rupees. Already the stock 8,000 rupees given in the costing on asset side of the balance sheet. Here in the adjustment stock to be revaluated 6,000 rupees. So listen here, stock already we have 8,000 rupees in the costing. After revaluated stock value 6,000 rupees, we find out 6,000 rupees. So stock value decreases from 8,000 to 6,000. So 2,000 rupees decreases. Okay. So stock is the asset item. Okay. So stock account decreases, asset account also decreases. If the asset account decreases, the revaluation account is to be debited. To stock account is to be credited. So where is the revaluation account? The revaluation account is on debtor side. So you go to debtor side of the revaluation account and write to stock account 12,000 rupees. Got it? The next adjustment is create provision for doubtful debts at 5% on debtors. Provision for doubtful debts is a loss for the company. 5% loss for the company. How can you manage it? That provision for doubtful debts 5% is taken from debtors, calculated from debtors. Okay. So debtors is an asset account. So provision for doubtful debts, the debtors value is given in the costing. Okay. So sundry debtors 60,000 rupees. From the 60,000 rupees you are taken 5%, which means 3,000. You will get 3,000 rupees. Okay. 100, 20. Okay. So you will get 3,000 rupees, right? 6 5s are 30. 20 is to be added here. Okay. So 3,000 rupees decreases. Loss means decreases. If the debtors value decreases, asset value also decreases. If the asset value decreases, revaluation account is to be debited. Revaluation account at 3,000 rupees to provision for doubtful debts 3,000 rupees. Where is revaluation account? It is on debtor side. So you go to debtor side of the revaluation account and write to provision for doubtful debt 3,000 rupees. Got it? So listen. The respective adjustment, all the adjustment we are going to enter into on revaluation account. Now we are going to find out the total. Which side we have the higher value? Debit side only we have the values. Credit side we didn't do any accounts, any transactions. We are only did debit side transactions only. So debit side we have the higher value, that is 5,000 plus 2,000 plus 3,000, we will get 10,000 rupees. The total amount is 10,000 rupees. The same total you are going to enter it on credit side. If you get the total on debit side, you will get the balancing figure on credit side. Balancing figure is 10,000 rupees. So if you get the total on debit side, you will get the loss on credit side. Okay. So the loss on revaluation amount is 10,000 rupees. That loss on revaluation account immediately distributed to the old partners capital account with their old profit sharing ratio. If you get loss or profit from the revaluation account, whatever it is, it will be distributed to the old partners capital account with their old profit sharing ratio. Here in this sum we got loss on the revaluation account. So this is also we are going to transfer to the old partners capital account with their old profit sharing ratio. Who are the old partners? Rekha and Mary are the old partners. So that 10,000 rupees we are going to calculate with their old profit sharing ratio. Old profit ratio is 3:1. 3 for Rekha and 1 for Mary. Okay. Now we are going to cancel it, right? 1 4 is 4, 2 4s are 8, remaining 2. 5 4s are 20, 2 0 is to be added here. 25 into 3 equal to 75. Through 2 0 is to be added here. 7,500 is to be distributed to the old partner Rekha's capital account, that loss. Then we are going to calculate that 10,000 loss with Mary's old profit sharing ratio. 1 4 is 4, 2 4s are 8. 5 4s are 20, 2 0 is to be added, 2,500 into 1s are 2,500 rupees. So that loss on revaluation immediately we distribute to the old partners Mary's capital account with Mary's profit sharing ratio 1:4. Okay, so we prepared revaluation account. Okay, now we are going to prepare the capital account. If they didn't ask to prepare the capital account, we need to prepare the capital account because we have the lots of adjustment in the capital account. Okay, so listen here carefully. We have the up to this we prepare the past the journal entry. Listen here, listen the question. We have the general reserve on liability side in the question. Okay, how much rupees? 40,000 rupees general reserve. So that for general reserve accounted or that general reserve is to be transferred to the old partners capital account with their old profit sharing ratio. Who are the old partner? Rekha and Mary. What is their old profit sharing ratio? 3:1. Okay, so that 40,000 rupees we are going to distribute to the old partners capital account with their old profit sharing ratio 1:1. Then 30 is to be 40 is to be added here. 10,000 into 3 is 30,000 rupees, and Mary's capital account 40,000 same 10,000 rupees into 1 are 10,000 rupees. Okay, so what is the journal entry? General reserve account data to old partners capital account, right? And workman's compensation fund 10,000 rupees is given in the question. Okay, how much rupees? 10,000 rupees. That workman's compensation fund also we distributed to the old partners capital account with their old profit sharing ratio. Who are the old partners? Rekha and Mary. That 10,000 rupees we are going to distribute to the old partners capital account. 3/4 for Mary. After cancel you will get 7,500, and 1/4 for Mary with 10,000 you will get 2,500 rupees. Okay, how can you prepare the capital account? The format of the capital account is debtor side. There are two sides of the capital account, debtor side and creditor side. Both side we have the same format, that is particulars and respective partners name on both side we entered. Okay, whenever you started to prepare the capital account, you always started with the opening balance of the capital account on credit side. This is the format. Which side you are going to enter the opening balance of the capital account? On credit side. Okay, so the opening balance means the already given in the question capital account. old partners capital account, that is the opening balance. Okay, so old partners are Rekha and Mary, 50,000 and 30,000. Opening balance means to balance brought down. Brought down means the opening balance of the capital. Got it? Then new partner Kavita brought 20,000 rupees capital, right? So what is the journal entry? Cash and or bank account at 20,000 rupees to Kavita's capital account 20,000 rupees. Okay. Where is Kavita's capital account? It is on credit side. So you go to credit side of the capital account. You are going to write by bank account 20,000 rupees in Kavita's column because Kavita brought 20,000 rupees cash in the name of capital. We entered. Then what are the whenever you see the capital account related transaction, you are going to enter into the capital account. Whenever you see the capital related transactions in the journal entry, you need to enter into capital account, right? So, okay. Then, listen here. General reserve account debtor to old partners capital account. Where is old partners capital account? Where is capital account appears? It is on credit side. So you go to credit side of the capital account. You are going to write the opposite entry, that is a general reserve. General reserve account Rekha's capital is 30,000 rupees and Mary's capital account is 10,000 rupees entered. Then where is capital account appears? It is on credit side. Okay. So old partners capital account is to be credit side. So you go to credit side of the capital account. You are going to write the opposite entry, that is by workman compensation fund. Rekha's capital value is 7,500 rupees and 2,500 rupees goes to Mary. Okay, entered. And we prepared revaluation account here, right? So we get loss on revaluation account. Revaluation credit side you get the loss. What is the journal entry? Respective old partners capital account debtor to revaluation account. Okay, where is capital account? It is on debit side. Old partners capital account is on debit side. So you go to debit side of the capital account and going to enter the opposite account, that is revaluation account. So the revaluation account, who are the old partners? Rekha's capital account 7,500 rupees, Mary's capital account 2,500 rupees. We entered Rekha and Mary's respectively. Got it? Now listen, we have here also one capital account, right? Kavita's capital account debtor to Rekha's capital account, which means goodwill value. Okay, that goodwill 4,000 rupees. Kavita's new partner Kavita's goodwill 4,000 rupees we taken from Kavita's capital account. So Kavita's capital account debtor 4,000 rupees to Rekha's capital account. Listen here carefully. Yeah, on debit and credit side we have both capital account, right? First we are going to take Kavita's capital account on debtor side. So you go to debtor side of the Kavita's capital, you go to debtor side of the capital account, you are going to enter the opposite account, that is to Rekha's capital account. Within the bracket you are going to write goodwill. So Rekha's capital account you are going to enter Kavita 4,000 rupees. And on credit side we have also capital account. So you go to credit side of the capital account, you are going to write the opposite account, that is Kavita's capital account. Okay, 4,000 rupees to Rekha. Okay, why? Because Rekha only sacrifices is the share of profit only, 1/4 to Kavita. Kavita get the profit. Okay, so that 4,000 rupees goodwill immediately distributed to the old partner Rekha. So we are going to enter it. Okay, so Kavita's capital account 20,000 rupees decreases from 20,000 rupees into 16,000 rupees. So all the respective capital related transactions we are going to enter here. Now we are going to calculate the total. Which side we have the higher value? Credit side we have the higher value. So first we are going to find out the total on credit side. 50,000 plus 30,000 plus 7,500 plus 4,000, you will get 91,500, and 30,000 plus 10,000 plus 2,500, you will get 42,500, and 20,000 rupees is entered. The same total we are going to enter it on debit side, the same horizontal line. Okay, now we are going to find out the balancing figure. Which side we have the balancing figure? Of course, credit side. If you get the opening balance on debit side, you will get the closing balance. If you get the opening balance on credit side, you will get the closing balance on debit side of the capital account. This is the format for the capital account. In capital account, you always started with the opening balance on credit side. The closing balance will be on debit side. Okay, so accordingly, now we are going to closing the capital account. Okay, how can you close it? We are going to find out the difference between total and the lesser value. So 91,500 minus 7,500, you will get 84,000. 42,500 minus 2,500, you will get 40,000. 20,000 minus 4,000, you will get 16,000. Against this, you are going to write to balance carry down. Carry down means closing balance. So immediately you are brought it down to the opposite side, and below the total we are going to enter 84,000 rupees, 40,000 rupees and 16,000 rupees. Against this you are going to write by balance brought down. By balance brought down means this is the opening balance of the capital account of next accounting period. So we prepared capital account properly. Now we are going to find out the balance sheet. The heading is balance sheet as on the 1st April 2018. There are two sides, liability side and asset side. Always we are going to start it with the liability side. It will be easy for you. On liability side, the first item you are always started with the capital account. Okay. Who are the partners? Rekha, Mary and Kavita. Rekha's capital value is 84,000 rupees and Mary's capital value is 40,000 rupees and Kavita's capital value is 16,000 rupees. The total capital amount is 1,46,000 rupees. In the question we have the sundry creditors. Sundry creditors is 20,000 rupees. We entered. Okay. Now we are going to calculate the asset side of the balance sheet. Okay. So as per the question, we are going to prepare the asset side of the balance sheet. In the question we have building. First asset item is building 50,000 rupees. So 50,000 rupees building. We have building account 10% depreciated. Okay. So 5,000 rupees. We subtracted 50,000 minus 5,000. We will get 45,000 rupees. And the stock we have 8,000 rupees in the question. Stock 8,000 rupees entered and 2,000 rupees stock value decreases. So we have to subtract the stock 8,000 minus 2,000. You will get 6,000 rupees. And in the question we have sundry debtor 60,000 rupees. So sundry debtor 60,000 rupees. Provision for doubtful debts 5,000 rupees is to be subtracted 3,000 rupees. You will get 57,000 rupees and cash at bank 32,000 rupees. Cash at bank 32,000 rupees. New partner Kavita brought capital 20,000 rupees will be added with the bank account. So Kavita's capital account added with the bank column 20,000 rupees. After you get 52,000 rupees. Okay, so all the respective transaction related to asset and liability side we entered. Now we are going to calculate the total. First we are going to calculate liability side total. Okay, so 1,46,000 plus 20,000 you will get 1,64,000 rupees. On asset side total means 45,000 plus 6,000 plus 57,000 plus 52,000. You will get 1,64,000 rupees. Okay, so we get same total on both and the asset and the liability side 1,64,000 rupees. Okay, so do you have any doubt? Please comment it into the comment box. Thank you. Take care.